Bismillahirrahmanirrahim. Assalamualaikum. My name is Aisha Isa, metric ID 1612348, and today I'll be talking or discussing about Laffer's curve versus Ibn Khaldun's model of tax. Now, author Laffer states that if the tax rate was to be increased twice the amount, it will not produce the same twice amount of tax revenues. What this explains is that charging high tax discourages the labor working force to continue working. Which can be seen in the peak at point B. The assumptions made will produce the individual's budget constraint as shown in the formula, which then give us three equations, which are: the first one is the supply side of market that maximizes the utility function with T assumed to be 0 when no tax is payable as constraint, which is denoted in equation number 1. The second is the government tax revenue function, which is denoted in equation number 2, and the government expenditure derived from profit function in equation number 3. In parallel to the budget balance, equation 2 and equation 3's function should be equal and therefore equilibrium. Now, given the assumption Valgas's law, which is denoted in equation 4, the final equilibrium will equate to equation number 5. With the final equilibrium of equation number 6. In equation 6, the right-hand side is the government revenue of budget balance. Now, since the right-hand side equates to the left-hand side, we can now estimate the slope of the Laffer curve, which is the derivative of the left-hand side of the budget balance, and it's equated as the R prime T shown in the formula. Three theories of Ibn Khaldun contradicting the Laffer's curve. The first being theory of value, money, and price. Now, this theory explains that the labor is a vital source to earn wage and profit, which therefore is needed in production. Now, different professions allow different amount of labor earnings, which is due to having different set of skills. Hence, it debunks Laffer's assumption that each individual is treated the same, as some occupation is more valuable than others, which in return has a higher wage compared to others. Second theory of Ibn Khaldun's is theory of distribution, where the price is affected by three things: wage, profit, and tax. The difference in wage gives out varying purchasing power from one person to another. Second, tax determines the wage of community. Hence, the willingness to purchase public good due to its demand supply varies as well. As much as the government expenditure is based on tax affect the wage obtained, which in return decides the profit of purchasing goods. So all three elements that affected price has different optimal level, which cannot be achieved anymore in the long run without different business cycle, which comes to the third theory, which is